ticker symbol CRTD may be prepping itself for a downside move. Let's go ahead and validate within this session. What is up, you guys? Thank you so much for stopping by once again on this fine Sunday. This is ARCa coming at you with the CRTD technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CRTD on the daily chart here, and these are my zones of supply and demand. Okay, so now what you're looking at here is essentially a bear flag. Okay, so we do have an ascending triangle forming on the daily here, and we are critically done here. So it feels like it's just about ready to break out, and the downside to this particular formation would actually essentially be found at the genesis of it. Okay, so I mean that would be from this point, from where we are right now, it would essentially be that. Okay, so the way you can actually take that price objective is by a trend line from the top of the formation, to the lowest point of the formation, and then you would apply it to the breakout point. Okay, so let's just assume that we were to do it on the following day. So we are being suggested about 39.61 from this point here. Okay, so the reason why I'm saying this is because, I mean, essentially we are in a bearish setup here. This formation, when it happens after a downtrend, is typical for a continuation to the way down. So it's a continuation formation. Okay, so let's go ahead and move on to the next chart, as I know we do have some ground to cover here. So now let's go ahead and look at that same formation now with a different perspective, though. Okay, so this is going to be the statistical side of the analysis, and now we're going to look at it from the perspective of a broadening descending wedge, of which I've actually been talking about for quite some time within the ticker CRTD. Okay, so it's been, I know I haven't covered it in a few days, but I've been covering it for the last few weeks. But yeah, so we did get that test number 1, 2, 3 of the resistance, followed by that capitulation event, and then that true breakout on test number 4. We did come back and confirm our newly converted resistance into now a support, and then we moved to the upside, eventually realizing what I wish I could continue showing for many tickers, as though this actually played out exactly the way the playbook rules suggested to be traded. Okay, so in this case, we did find that overall target right at the beginning of the formation itself, which was at $1.75. Okay, so this actually played out very well. It sold off right after that moment here, right after that moment of the touch of the take profit zone, and then we came actually back to finally retest again this newly converted resistance into support. Okay, so now it looks like we may actually want to come back and retest this area yet again. Okay, so if you actually take that trend line from the top of the triangle to our current position right now, so let's just go ahead and take that and apply it from the supposed breakout point, right? So it would essentially be from, let's just say, the following day, right? So you can actually see that it would be essentially taking us back to test this newly converted resistance into support yet again. Okay, so there is a continuation to the way down, and some people may even start seeing this as like a type of ladder attack. Okay, but it's just pardon me, wow. But it's just particular to price action. This is generally how things tend to move. Okay, so now I actually ran a back test that's actually particular to the downside in this, and it's involving volatility versus momentum. Okay, so in this case, volatility represented by this indicator BBWP, and we have stochastic momentum to give us the bias for direction of the asset, since volatility is direction neutral in a sense. Okay, so what I have done is that I've taken note of every iteration where volatility has reached the 90% or the 90 percentile of critical volatility and started a contraction phase towards the downside. Okay, so what? And this is particular to the downside. Okay, so I've taken that. I've taken those iterations throughout the entire trading history of it. Okay, so those are all my notes there. And what I can say is very interesting, actually. So out of a total 15 iterations, 13 were guessed correctly to the downside. And that gives us an average downside accuracy of about 86.66%, which is pretty substantial. Okay, so now the average downside thrust is minus 48.36%, and over the span of about 77.23 days. This is proof of work. Now, please remember that these are just statistical metrics. They are not certainties. Okay, so it's just for us to evaluate the possibilities. Okay, so if we were to take that full downside, actually I would have to replace that word thrust with pressure. So if I were to apply that, minus 48.36% to the downside, let's go ahead and do that now. Okay, so let's just kind of take it from the current price action, or from where we are presently. Okay, so that's minus 48.36. Let's go ahead and now measure that to the downside. Okay, so let's see, 48.36. Let's see. Okay, so 48 spot. Hold on just a sec. Let me just put it maybe from like where we, like a very close area from where we are. So from the current price action, right? So let's see. So 48.36. Oh my goodness. All right, that should be close enough there. Yeah, so it's actually suggesting for us to come right back down to the newly converted resistance into support. Okay, which is very much in confluence with our price objective per the traditional trading rules of trading this formation, or a bear flag, right? So the continuation pattern. So it's very interesting that we are suggesting that move to the downside. Okay, so now let's go ahead and continue validating our downside, and we're going to do that now with the RSI. So I have noticed something very interesting here, of which actually I didn't note the second iteration of, so I can actually do that now, and I'll just do it just like this. Okay, perfect. So, yeah, this is going to be the divergence drive, or divergence, however you guys pronounce it. There's always that potato, tomato, whatever. So, we are noticing here two drives of hidden bearish divergence, which actually happens when momentum actually makes a series of higher highs, and price action is making a series of lower highs. Okay, so divergence is actually the opposition of price action versus momentum, and in this case, momentum represented by this indicator RSI, so relative strength index. Okay, so the purple line represents this RSI signal itself, and the pink line represents a 14-day simple moving average. Okay, as you can see, the 12-hour time frame signal is still suggesting a downside continuation. Okay, so let's go ahead and just open up the RSI diagram, as I would like for you guys to focus in on these four zones as they are located right over here on the live chart. Okay, so let's go ahead and open up that multi-pane just like we always do, and start off the analysis for the last part of this video with the immediate short-term time frame, 30-minute. Okay, so the 30-minute is suggesting a continuation to the upside, but please pay very close attention here, is that we do have the 14-day simple moving average above us, which actually would essentially serve as a resistance. Okay, so that means that the upside is very limited, and it could that upside could start very much immediately and end. Let's see. Wow, so it actually is going to be very short-lived. Okay, so yeah, we can see definitely a resistance here at that 14-day simple moving average. Let me just make these side numbers a little larger, as I know that there are some of you on. Oh, my goodness. Okay, so. This is terrible. Only did it to one and not to all of them. Okay, so now the buy hourly is suggesting an aggressive downside continuation. Okay, so and now let's see, we have actually crossed below the 14-day simple moving average, which is very bearish. The 6-hour time frame is suggesting a continuation to the downside as well, and has also made a bearish cross below the 14-day simple moving average. Okay, now the daily, since we already saw the 12-hour, let's look at the daily. So the daily is suggesting a downside continuation as well. Okay, so now in this case, we may be looking at what could be a limited downside downside as well. Okay, as you can see, we've actually been using this 14-day simple moving average as a form of support before a continuation to the upside. So in this case, we may actually face that same thing. Another good thing is that usually when we're in the shallow areas of either of these zones, we can actually face a gravitational pull right back up. Okay, so in this case, we would actually be not only facing the support from the 14-day simple, but also from that gravitational pull, suggesting a continuation to the way up. Okay, now let's see the buy daily. So the buy daily also suggesting similarly to the daily chart, and it is a limited downside also within that shallow area. Okay, so 3-day looks to be a little bit sideways here, and the 5-day looks to be slightly bullish, definitely bullish 14-day simple moving average, but looks okay. So yeah, we're likely going to be seeing this is what I got, okay, from the puzzle pieces that we just saw, right? What I am seeing is that we are likely to come to the top of this trend line here. We're to about 89.15 at the very top. We can actually see some moving averages, just in case there's something of resistance there for us to evaluate. Okay, yes. So we do have that 50-day simple moving average located just at that 89 cent zone, or 88.98, right around there, and it can also serve as that form of resistance before a continuation to the way down. Okay, so now let's load up some EMAs and see what we have. All right, so the EMAs are not relevant to this particular time frame right now. Okay, so and you know what, actually we can just take a fib and see if we have some relevance to that 89 cent zone. Okay, so let's go ahead and see what we have. So we at the very top side, let me just go ahead and put up the SMAs again. So the 50-day simple moving average, I would give it actually a range now. Okay, so from the 50-day simple moving average to the one spot 272 right over here at 90.72 would essentially be that resistance area, and which actually is right in it's actually right at my top resistance that I've had for some time now. I'm just saying it was curious that I had this resistance here already drawn for quite some time. So yeah, we're looking at essentially the same resistance area before continuation to the way down. So please remember, it could be in a very discretionary manner. It could be 89.69 to about 90.72 as that resistance before we start the downside continuation. Okay, so now let's take an inverse fib and see if there is any relevance to the price objective and the statistical downside. Okay, so 46.36 is the 4 spot 618. Let's just go ahead and move to this chart over here and see what the statistical side is suggesting. Okay, so the statistical side is suggesting 41.69, and the triangle is actually suggesting at about 36.62. Okay, so that's those are several ranges of support that we can see. Now, it's also in accordance with our demand zone right down here. So very curious stuff. Okay, guys, so that's essentially what I'm looking at. Definitely some upside in the immediate short term. But I mean, guys, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, okay? As I can't suggest for you to buy or sell any assets. All right, I need you to do your own DD and everything will be just fine. All right, you guys. So, I mean, yeah, I'm looking at that short-term upside to that resistance range that I gave you, and then essentially continuation to the way down for actually several days before a recovery from potentially this area here, okay? So, guys, if you want to get in touch with me, I know that it's been a little difficult for me to reply. That's just because I'm getting saturated with a lot of comments and emails and messages and DMs and stuff. So I will try to get back to you as soon as humanly possible. I'm not dodging anyone. I'm actually really trying to reply to as many as I can. Okay, you guys. So, and yeah, if you want to, I mean, regardless, if you want to get in touch with me, the Twitter and Discord Discord links will be included in the description below. If you want to trade if you want to trade alongside me while we evaluate these tickers, definitely consider clicking on my affiliate link for TradingView software. It is located in the description below as well. Okay, you guys, as that actually would help my trading future very much so. All right, you guys. Well, thank you so much for watching. I wish you well and a great rest of your long weekend. And I will catch you at the bell on Tuesday. Adios.